Philip, great to meet you. How are you doing?
Adam, very good news.
Good, good. Yeah, I've been obviously checking out Zilch a lot in TechCrunch and various publications. It sounds like a pretty meteoric rise. Over a million users in the UK, over 13 months, double unicorn valuation, north of $2 billion, 250 staff. It sounds like things are going pretty well.
Yeah, no, thanks. I mean, look, it's like anything, I guess. We're just sort of putting one foot in front of the other foot. But we're really happy with where we're at in the UK. So obviously this is our home market. We had about 2.5 million customers today, and we're still growing at about 300,000 customers a month. So, so the UK is obviously really a major focus for us. It's where our headquarters, is situated. But we were just, everyone's really excited about the fact that we've recently launched in Miami, in the US, headquartered in Miami. And we were over there about 3 months ago with the announcement, Mayor Suarez, at the mayor's office in Miami. And it was just, it was a lot of good fun. And obviously everyone's really excited about the size of the market, because you really are just looking at such a significant population. And so when we look at kind of target market, we we see kind of lookalike audiences of about 125 million people in the US as a potential target market. So, so we really are quite excited about that when you consider the fact that we had about just over 5%, almost 6% of the adult population in the UK already uses our product. We're quite excited to see how far we get in the US and how quickly we can do it.
Amazing. Yeah, I mean, it's, like I said, meteoric rise. But let's rewind things back a little bit. Perhaps you can start by introducing yourself and Zilch and basically what your core mission is. That'd be good stuff.
Yeah, brilliant. So my name is Philip Belamant. I'm the CEO and co-founder of Zilch. And, our mission as a business is really to build the most empowering way for people to pay. That really is what we're trying to achieve. And so, fundamentally, a lot of people tend to sort of bucket Zilch into BNPL. So, there's a bunch of other really interesting businesses in the space, that all of us have heard about. Companies like Klarna, these guys have built some really amazing businesses, Afterpay, businesses like this. But fundamentally, the difference between these companies and us is really, based on who we serve and ultimately who the customer is. And so for us, the customer is the end consumer rather than the retailer. And so, it's kind of the way we think about the world is just a little bit different to these businesses. If you ask these companies what they believe, as an example, they'll tell you, they believe that they make checkout seamless, easy, and provide their customers with payment choice. And therefore they drive sales and reduce basket abandonment for retailers. That's what they believe. And, they do a pretty good job of that. What we believe is that no one should be financially excluded in the world. We believe that no one should have to be penalized financially for the privilege of having something they need when they want it and being able to defer that cost over time. We believe that people shouldn't let payment get in the way of reuniting with loved ones, seeing someone who might be sick, traveling to get that job interview. These are the things that we believe. So fundamentally, that's how we think about our product, and that's what we serve in consumers. It's just a fundamentally different way of thinking about the world.
Nice. Yeah, that makes sense. And how much does technology play in this whole equation in solving solving the problems and solving your mission?
Yeah, Adam, as you expect, everything is underpinned with technology. So this would not be possible if we were doing this, without a whole lot of either our own tech or third-party tech. So the one thing that we also really are firm believers in is that to disrupt a space, you don't have to completely disregard the ecosystem or infrastructure that's been built before you arrived. In fact, our view is you should leverage this infrastructure, and then you can build something far bigger, far quicker. And, so as an example, if you look at a bunch of other providers in the space or people near us, they feel like you almost have to throw everything else away. We need to do our own direct integrations with retailers, but it takes a long time. You're almost building your own network up. You got to go one by one. You've got to have a sales team. In our case, we're actually looking at saying, guys, Visa, Master, Discover. I mean, there's so many people who have built big businesses that have spent billions building infrastructure. And then you've got ad houses, sales agencies, etc. Why don't you just combine all of these things and build something over the top of this infrastructure? And this way we could get bigger so much faster, and we can leave all these jobs intact. In fact, we can stimulate all of these businesses. We can continue to build revenue for them, and at the same time build a lot of value for our business and of course our consumers. And that's really what the way we think about it. So we're leveraging a lot of tech that we've built on top of, like the MasterCard rails, affiliate commission platforms and intermediaries. We're leveraging all this technology, but then have pulled it together with our own proprietary tech, and that's how we serve our customer through our product, our app. And so tech really underpins everything.
How many what proportion of developers would you say you have versus overall employees?
I would say at this point in time, it's at least half, if not more, of the business. And then a close follow to that is data. So, in every single team, we have someone from data, either a data analyst or a data scientist in every single team in the company. So, but definitely the largest component, I mean, ultimately we're a tech business, right? So the tech team is certainly the largest by far.
No, that's super interesting. Yeah. So a data component of every team. I mean, so obviously clearly very, very data driven. I mean, do you have like a central company North Star metric?
So what we do is actually across all of it. So we run a matrix structure in the business. So we have domains, and then we have competencies that cut across all of these domains. And so basically what we have is we've aligned the whole business with customers and what customers do. So basically any major action a customer takes, let's say for instance, we have new customers, we have a whole domain committed just to new customers. How do we find them? How do we onboard this customer? How do we make that experience fantastic? What happens if they drop off? How do we re-engage with this customer? How do we show them, what we're all about? So that whole domain just focuses, and it has a full stack team just in this domain. We then have customers, for instance, they spend with our product, right? And we have a whole domain just dedicated to this. How do they spend? What's stopping them spend? Is there any fraud? What are the blocking rules? How do we unblock a customer? How do they self-serve, etc.? And then we have retain and so on and so forth. So we have all these domains that are very specifically focused on customer actions. And that's what the business worries about. And we set OKRs every quarter for each domain. So the idea is that we sit down and we say, right, this is what we're trying to achieve. Ultimately, we always talk about customers first. So how much in savings are we trying to generate for customers over the next quarter? How many customers do we think we can save from high cost credit products like credit cards or online lending, or for instance, overdrafts? And how much in fees and interest do we think we can save people? And this is, for me, what I set as the big objective of the business. And then what our teams do is they go and they say, right, how can we make that happen? So what OKRs within our team, within our domain, and our squads in the domain can we actually go and set for ourselves to make sure we contribute to this? And that's basically then what happens. So it waterfalls down into the business. And so they go away, everyone thinks about this, and they've come up with 3 OKRs that they say, look, we're going to go and achieve sales of X. We're going to reduce bad debt by Y. We're going to, have conversions increase from month 1 to month 2, retention by 10%, and so on and so forth. So every single domain in the business has their OKRs for the quarter. And then we actually use a platform called Looker, which is a real-time cohort analysis view of every cohort in the company across all the countries, how they're performing, how we're retaining, where they go, if they come back, what's happening on an ongoing basis.
That's awesome. Yeah. So proper customer centricity at the heart of pretty much everything you do, which is, I mean, there's a lot of companies that say they do this, but there's not too many that sort of really live it. So that's super interesting to hear, as well as the sort of, the data-driven, the truly data-driven approach. It's easier said than done, I think. So Claimer, is a C-stage company, and us growing from 10 people to 20 people, I found, quite challenging. It goes from sort of a big family to, just sort of almost like a much bigger group of people. And there's obviously quite a few challenges with that. So I can only imagine what it was like going from sort of 0 to 250 plus staff in 13 months. I mean, how on earth did you manage that? I mean, maybe you can talk me through the secret sauce there.
Yeah, as you would imagine, it's relatively painful. I mean, to be honest, we did this also initially, started scaling up the teams during COVID. So, we had this bizarre situation where we went into COVID with 20 odd people. And the first time we all got together as a team when we were allowed to, we were maybe 120 people. So it was just a strange situation because those of us who knew and had met each other beforehand and had been working together for a year already, we kind of then got back together and there was another 100 people in the room and everyone's like, wow, what's going on here? So, scaling through Zoom, interviews through Zoom and trying to do that was certainly more challenging, I would say, than, what it is today, what it is now. When people can come in, we can have interviews face to face. But, we deployed sort of a multi-pronged strategy on talent acquisition. So basically what we did is we said, we must build an in-house team. We certainly need to have that, but then let's plug a third-party company in. So, it's the usual story. You start with some agencies, you go out to agencies and that's sort of the starting point and that has its place and that's fine. What we then discovered is we need to build an in-house talent team. So we really need people who get us, who understand our culture, who can express this to anyone who wants to, apply for any role and talk them through exactly how we are as a business. And so we started building the in-house talent team. And then at the same time, we said, let's start to migrate away from agencies. Let's really go and plug in a third party who can help augment the talent team. And so ultimately we ended up with about 25 talent acquisition people just dedicated to hiring all day long. That's all that this team was doing outside of agency. And then if something got to a period of time that we couldn't fill this role with this team of ours, we then went to agency. And that's basically sort of the engine we use to drive the growth in the team. And that's the way we've managed to, we believe at least, control the culture of the business really well. Is that everybody comes through an in-house team that gets it, they've been with us, they know it, the culture's there. And so we don't just have agencies saying, let's put bums on seats, right? Because that didn't really work for us. And so that's really what we've done. So it's a combination of all of this that we've used to really then scale up the team. But I have to say, that's that plus the profile building of the business as we've raised further capital and obviously as valuation has increased, it certainly helps, right? I mean, so people are reading about the company, they're aware of what we're doing and they're excited about our mission. And so they want to be part of the business and that also helps. So the inbounds have certainly increased dramatically, which definitely helps. So a combination of all of these things really, created a scenario that we could go and execute quite well against this. But it's still tough. At the end of the day, the market has been completely insane when it comes to hiring phenomenal people. We've got Google below us and above us in this building. We have Facebook across the road. So, it's just one of those things that you really need to compete and we need to put our best foot forward. And what we found that works best is having an in-house team that gets the mission, understands the culture and can clearly communicate and articulate not only why you're going to be working with phenomenal, really smart people, but obviously why you want to do that here. So that's worked very well for us, but it's been an unbelievably heavy lift. In some cases, some of our top management spending 50% of their time just on hiring.
Talking of challenges, what would you say your greatest challenge so far has been, and what is it now, briefly?
That's an interesting one. Look, it's interesting because there's been so many. I mean, we were born in a pandemic as a business effectively, so about 2.5 years ago to the day, sort of kind of around March, 2 years ago, we had a term sheet from a really amazing VC, plus we had about 100 million of debt lined up based off of this term sheet. And we lost all of it in one phone call when, basically COVID arrived on the scene, and everyone said, we're not sure now. We don't know what we're going to do. We're going to wait and see, and reneged on this deal. And so we lost all of that. And so, we've had some unreal challenges along the way, whereby we went into COVID. We said, well, we're going to invest further. Myself and my co-founders, let's invest further in the business. Let's just double down on the product, the team, and let's just carry on. And then we came back to market right in the middle of the pandemic to raise money. And that was, kind of like, I think I needed to invest in a new chair every week. You're doing like 250 calls. You're just sitting on your chair. I think like all of us did from 7 in the morning till 10 at night, every day and all day. But, we did 250, 300 calls to really close our first round of funding right in the middle of a pandemic, which was pretty phenomenal. And so then it rolled forward, and we there was a lot of UK initiatives from government to help businesses, which was really amazing. So you had like the Future Fund and all of these types of things come out, and we were like, wow, this is exciting. So they'll put a pound for a pound. So every pound you've raised, they'll match with a pound. This is a great way for us potentially to look at raising additional capital. And obviously, we had been a little bit smart on the first round, and we did things on convertible notes. So it wasn't actually equity at the time, hadn't been converted yet. And so we didn't qualify for the future. So, we got all excited about this. Well, then that went away. So it's like anything. There's always ups and downs, and then here we are today now. Obviously, last year was extremely bullish. Markets were pumping, everything was going crazy, which was great. And, we grew rapidly, which is brilliant. But, and now we sit here, all of us looking at the market today going, what's happened? Everything has turned again. So, we've just it's just sort of been from the start for us. There's always been a challenge. It's not that, and I think that's the same for any company, regardless of whether it was COVID or something else. But for us, we've been presented with some pretty tough environments and challenges right from the get-go. So there's too many to list, really. But certainly I would say what we've done well, at least, is we've managed both, our capital story as well as our product for our customers. And we've really, that's with focus, so that's really gone well for us. So I feel like the capital market really does understand what we're doing and why it's unique. And that's very useful. Because one big challenge has been trying to divorce our story from BNPL, because really we don't believe in BNPL. We think point of sale finance buttons are commodities. We don't like the business model. It's a race to zero, and we just don't think it's a great space to be in, which is why we specifically chose not to build a business in that space. But people obviously look at installment payments and they go, oh, it's BNPL. So for us, one big challenge has been changing that, making sure people's understanding of Zilch is completely different to what's come before it in the likes of these other products and services like the Klarnas and the Afterpays. Great businesses, but we just don't want to be one of those companies. So that's been a challenge to overcome for us amongst all these others. But certainly I think the success so far has been attracting phenomenal people and finding product market fit as early as we did. A lot of even our own team takes this for granted, where we come up with a great idea. We've got a new thing. Oh, we're going to roll this new feature or product out. It's going to be great. And then we do that. And what it's like, maybe the 10% of people try it out, and, it's not so successful. Just people underestimate how hard it is to actually find product market fit. And we were just really fortunate that we were able to find it so quickly with our initial product offering. So that's certainly been phenomenal. And we only managed to do that because we have been able to attract and retain phenomenal people who's obviously gone and helped us build such awesome products. So I hope that answers the question.
No, absolutely. It sounds like an epic journey. And it definitely sounds like you would be described as a wartime CEO, given those challenges.
Yeah, no choice, by the way. It's like, that's just it, right? That's what you serve. That's what you serve. But it certainly is. And actually most of the people in our company we're talking about this the other day. Most of everyone in our business really is wartime. We're not peacetime people. So we revel in this type of scenario.
Nice. It's amazing. We've probably got time for like maybe one more question. So I mean, one thing I always like to ask is, I mean, you've been, founding and running companies your whole life, pretty much, a lot like me, but very much like me, you probably made a lot of mistakes along the way. What advice would you give your younger founder self?
Oh, that's an interesting one. A lot of people ask what advice you would give to entrepreneurs. But what advice I would give to myself, I would say, so it's interesting. So right now, my last business became a very large payments company out of South Africa through Africa. And that business, I really was on my own as the sole founder of the company. And in this case with Zilch, I have co-founder in Sean O'Connor, and we work really well together because he really focuses on capital market side, the fundraising equity side of the business, and I focus on driving and running and operating the business, product strategy on a day-to-day business. And this really works nicely. It's a nice balance. And so, probably if I had to go back, I would say do your best to find a co-founder, someone that you can depend on, because all of us are human, and you've experienced this, I'm sure, many nights, Adam, where you're lying awake and you're like, I'm not sure how we're going to fix this, right? And the problem is, if you don't figure it out, no one will. There's no one else.
It's not the kind of thing you can just sort of discuss with your team always, is it? It's like something that yeah.
And that's where you get these YEOs, young entrepreneur organizations, things like this sort of popped up, because they recognize this and saying, how could you actually speak to someone who can meaningfully help you? And the problem is, unless someone is in the business, I find a lot of advisors and whatever, they might have something great to say at a high level, but mostly it's rubbish, right? Oh yes, here's a bunch of nothing information for you, but I feel good. For me, what I've always found useful is you have to be in the company really to help. Otherwise, you just don't understand the mechanics, right? So you might give me some advice and I take some interesting feedback or an idea from that and I run with it. That's one thing. I'm talking about when you're lying awake at night, you have a big issue, you don't know how to fix it, right? What do you do? And if you don't figure it out, it can be a little lonely, right? Because you're like, if I don't fix it, no one will. So the one thing I would say, is if you can find a co-founder that you can rely on, so then when you wake up the next morning, you haven't slept all night, you wake up the next morning and you get a call and that person says to you, hey, I couldn't sleep last night, but guess what I came up with? What do you think about this? That's pretty cool, right? And that's really interesting. And you can kind of, that allows you to dovetail a little bit, because, you have your peaks and troughs. Everyone's kind of got the energy days and the low energy days. And I do feel like that certainly is something that if you can find it, and it's hard to find, then I would have said to myself, that would have been really useful. And the other thing is probably just not forgetting to manage the capital side of the story. You're selling two products. You're selling a product to capital markets and you're selling a product to consumers, whether that's businesses or people. But you must do both. And that's probably also important advice, I would say.
Yeah, I mean, the whole co-founder thing is a bit of a kind of rabbit hole by itself. Probably do a whole separate chat on just finding a good co-founder, because it's not easy. So yeah, I mean, we've got maybe like 2 minutes left. So maybe you can tell me about what's next for Zilch briefly.
Yeah, so really for us, I mean, we're in the UK today. We've just launched in the US. So for us, the focus is absolutely right now on continuing to grow in the UK, but knocking it out in the US. I mean, that is the focus. So, third largest e-commerce market in the UK, US is the first, arguably. And so we're really excited about just putting a lot of our energy and time into this. We're not one of these businesses that likes to plant flags, so you're not going to read, oh, Zilch launched this country, that one, this one, and we do all of them a little bit badly. We prefer to really just, when we do something, we do it right and we just execute it. So, we understand and don't underestimate certainly the heavy lift it will be for us to really be successful in the US. We've seen a lot of European companies try to move over to the US, doesn't quite work out. So, we don't take it lightly. We're not just assuming it's going to all go great. And, you know, we're going to put in the same level of grinding it out that we put into the UK. Effectively, it doesn't have a choice. It must work, and we will not sleep until it is working. And that is the phase we are in. So it's almost like blinkers on, guys. We're not talking about anything else. There's nothing to talk about. We are going to absolutely knock this out the park. And that's what the focus is right now. Obviously, from there, you know, the roadmap for us, of course, includes Europe. And so we intend to also bring a pan-European rollout of our product, you know, relatively soon. But that will be off the back of us really making sure we're in the market, we're growing well in the US. And so for us right now, that's where we're at in terms of, you know, geographical rollout. But as a product, effectively, we just want to be, as I mentioned earlier, the most empowering way for people to pay. So what that means in our minds and our customers' minds is we should allow you to pay, you know, anywhere you want, anywhere you want, and using any form of funding you want. So today we allow you to pay in one and get cashbacks and deals. You can pay in four for free anywhere you like. We're going to be extending that to paying 6, paying 3 months, and so on. And today you can fund this with fiat currency, or you could fund this with rewards. We're going to be launching crypto to include this. We're going to be allowing people to link loyalty, like let's say your Nectar points, things like that. And so basically the idea with Zilch is that you can pay any way you want, but you could use any form of funding. And ultimately, you know, we think that that's going to unlock a lot of value for our customers. And we see when we sit and talk to customers, they're like, wow, that would be amazing if I could go and use, you know, my Emirates miles and pay in for anywhere. That would be pretty cool. And so that's the aspiration for us as a business.
That's great. Yeah, exciting times. And I think we're about out of time, actually. But yeah, I really appreciate that, Philip. Yeah, awesome speaking with you. And where should everyone go to find more about, you know, Zilch and you?
Yeah, so they could just go to payzilch.com is the easiest place to find us. Download the app on any of the app stores. And then for me, they could just look up Philip Belamant on LinkedIn and you'll find me there.
Awesome. Well, thanks very much for your time, Philip. Have a great day. And yeah, hopefully we'll speak again soon.
Adam, good to see you. We'll speak soon. All right. Ciao.
Cheers, man. Thanks for that.